It is June 21st, Tuesday, June 21st, and this is your daily financial news. First thing to call your attention to, I did a deep dive on existing home sales this morning at about 7:10 a.m. Full of details, all the numbers I got from the various articles. The things that I want to kind of highlight your attention in the broader picture of the daily financial news is first, transactions were down 3.4% to 5.41 million, not nearly as bad as I thought they would be. Realize that closings in May means contracts were signed in late March or April. So we have not yet felt the full effect of rising interest rates. More declines in transactions are coming, and even Lawrence Yun, the chief economist at NAR, or National Association of Realtors, said just as much. In addition to that, inventory, while up an impressive 12%, is still down from last year. I could not have believed that. We are up 12% month on month, but down 4% year on year. And then, of course, median home price. There's lots of people out there telling you that median home price is going to crash 30%. I'm consistently telling you that is not happening this year. Well, lo and behold, median home price went up 14.8%. The median home price now is $407,000. Part of the reason for this is the Fed broke housing. The low end is nearly non-existent. The low end inventory between $100,000 and $250,000 is down 27%. It is hard to see median home price fall when you lost a quarter of the low end. On top of that, the high end, 750 to 1 million, up 26%. Calling a median home price this year is a layup. I don't know why people fight me on that. It is a mathematical equation. Math works. So on top of that, so again, pending home sales, a lot more numbers in my live stream from this morning. Went over all the numbers, regions, things of that nature in there. Next, Capital Economics is out talking about home prices. They see what's going on with rising rates. 18 million people have been priced out because of crashing affordability. They are telling you, best case, they see a 5% drop in home price nationally in 2023. Is 5% a crash? No. Is 5% a correction? I don't know. I would think 10% would be a correction. I don't know. In the end, they're calling for 5%, which what I thought was interesting is they expected a pretty nice bounce back in 2024. Much closer to trend. We got to get back to trend. These 20%, even 14% that we're seeing today, not normal, not okay. We can't keep compounding 10% on 10% on. It is not healthy. It is not. It has to cool out. It frankly, flat for 5 years would be okay by me. Next up, I'm starting to read some articles, again, talking about the 1%, the top 10%, and all of us, the 90%. Did you know that stocks, again, according to this one article, did I highlight who wrote this? One sec. I did not say who wrote this. I think it was Fortune. It might have been Forbes. It was one of those two. The richest 10% own 88% of stocks. Thus, the other 12% for everybody else. But real estate, almost the great equalizer, if you will. Real estate, the top 10% own 45% of the equity, while the other 90% have 55%. So again, what this means is the great majority of us have our wealth, our retirement, our savings, whatever you want to call that, in our homes. And this is why, again, it is a very easy call for transactions to go down in median prices up. You don't want to sell. You have an asset in that 30-year mortgage. You're not going anywhere. What are you going to do? Rent? Live in your car? Very, very interesting times. So what else is going on? Lots of other stuff on this Tuesday, the 21st. President Biden is looking to potentially have a gasoline holiday. According to this article, that would mean about 18.5 cents per gallon. Nationally speaking, that's better than a sharp stick in the eye. 18 cents. Again, I'm curious. I don't know. Would anybody know where that money goes? Because again, if you're not going to tax the 18 cents, it probably goes to highways and things of that nature, right? So are we robbing from Peter to pay Paul? Where's the money going to go? Are they going to raise our taxes later? I don't know. Larry Summers is out again talking about, hey, my best guess is we are in for a recession. What is interesting in this article is Larry Summers says we have to get unemployment to 5% for 5 years to ease inflation. I read that and shiver, first off, kind of a scary thought. But that just tells you how sticky inflation is. Not good. Affordable housing in California. This made me chuckle. Affordable housing in the cities of San Francisco, Oakland, and San Jose. $1 million a unit. We're talking apartments. It costs $1 million to produce an affordable apartment unit. What? California's regulation, King Newsom, be better, do better. That's not okay. Come on. Looks like JetBlue is really trying to buy Sprint Airlines. They just raised their offer to $33.50. James Bullard, he's a Fed president. He is the most hawkish. He's the one, again, last time called for 75. So he's a guy that I lean towards. He is out saying that he thinks the U.S. economy should keep growing the rest of the year. And he is hoping for a repeat of 1994. If you don't know what 1994 is, that is the last time the Fed successfully created a soft landing. It is also the last time the Fed raised the funds rate 75 basis points. So again, I think we should all hope they do. A soft landing would be much better for the economy and consumers. James, I don't see it, but I hope you are right. Another interesting point about 1994 is the Fed raised the funds rate 300 basis points. We look to be doing that this year as well. So lots of similarities with 1994. I want to wish all of us good luck. The UK, I don't know if you're seeing what's going on in the UK. They now have nearly double-digit inflation, almost 11%. In addition, they are now having employment issues. They are having a strike today on the rail systems. Again, this is very likely to anchor wage inflation in the UK, which will, again, keep it going. They're comparing what is going on in the UK economy to the 1970s. It is the worst imbalance of labor. It also highlights that in the 70s, it took the UK 10 years to beat back inflation, which is kind of scary. On to some earnings. Lennar home builder, reported today. And as expected, they beat top, beat bottom. What that means is they revenue beat, earnings beat, and I would argue crushed expectations. They did highlight in their earnings call, we have noticed a impact of higher interest rates late in the quarter. What are they supposed to say? But yes, we are clearly seeing that. They have not yet, or at least I have not read about discounts and things of that nature, cancellations. I hope to pick more up on that. I actually might listen to the earnings call on replay later in the day. I did not get a chance this morning. Kellogg's, the cereal company, is looking to split up They are going to become a snacking, cereal, and plant-based business. Basically, the parts are greater than the whole. One public company becomes three. If you happen to be a shareholder of Kellogg's, I think you're going to like this announcement. And then right before I started, it looks like the CEO of DocuSign is stepping down. I did not read about any reasons, but my guess is he is just tired. It's been a rough couple of years, and maybe it's time for some new blood. Again, wild guess. Again, June 21st, pending home sales 5.41 million. Not nearly as bad as I thought. Median home price up, 14.8%, if memory serves. And we have to congratulate somebody for doing the work, getting their next deal. Let's do it together. Lewis and Lady, congratulations for getting your deal. Your card will go in the mail today. Folks, the daily financial news is for you. 12 to 15 minutes. What is going on? Consumer, cost of capital, housing. These cards are for you. I want to congratulate you if you are doing the work. Again, I am an easy grader. You get a home, I want to tell you want a house hack, I'll give you a card. You want to buy a rental, I'll give you the card. Airbnb, don't care. I want to know what I'm doing every day and if it's helping. Take care. Tuesday, we got Matt, Omar, and we have a surprise guest at 10 o'clock. It is going to be a great day. I hope you have a great day. Bye.